Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Pool Lock YouTube channel. I'm James Locke. Today we're going to answer some more Ask James questions of the day. First question from Kyle wants to know, how do interest rates affect real estate values? That's an insightful question because interest rates, indeed have a significant impact on real estate values, which ties into broader financial strategies, especially for those planning for retirement. So as I mentioned, when interest rates rise, it typically creates a headwind for the value of financial assets across the board, including real estate. This happens because higher rates mean borrowing costs for home buyers, higher borrowing costs, which can reduce affordability and demand. Conversely, when interest rates are declining, it tends to create really a favorable environment, a tailwind for real estate values. Lower rates means lower borrowing costs, making homes more affordable for buyers, which can increase demand and potentially push prices higher. Now, you rightly pointed out that despite recent interest rate hikes, residential real estate prices have remained robust, right? The phenomenon can be attributed to several factors. Firstly, mainly home buyers still hold mortgages at historically low rates, 2.5%, 3%, 4%. When rates surged closer to 8%, it became less attractive for these home buyers to sell and take on higher mortgage payments somewhere else. This has contributed to a reduced supply of homes for sale, driving prices up due to the imbalance between supply and demand. Moreover, certain local factors like property tax implications, in places such as Florida, right, where homesteading can significantly impact tax obligations upon sale and repurchase, have also played a role in keeping prices elevated. These dynamics highlight that real estate pricing isn't just about interest rates, but also about personal financial considerations and local market conditions. Looking ahead, if interest rates were to decline back to the 4% range, it could potentially further stimulate demand for real estate. Lower rates would mean home ownership is more accessible, potentially increasing both first-time home buyer activity and demand for second homes. However, there's a nuanced effect here, right? If rates drop significantly and stabilize at lower levels, more homeowners may consider selling their homes to capitalize on favorable refinancing or purchasing opportunities elsewhere. This increased supply could eventually lead to a softening of prices as the market adjusts to new equilibrium levels. In essence, while lower interest rates generally support higher real estate values due to increased affordability and demand, the impact can vary based on local market dynamics and individual financial circumstances. Now, for retirees or those nearing retirement, these considerations are crucial because real estate often represents a significant portion of their wealth and income strategy. It's essential to monitor interest rate movements and consult with a financial advisor who understands how to navigate these fluctuations to optimize income and manage risk effectively in retirement. Fantastic question. If you have a question you'd like to send in, you can do so by emailing them to poollock@poollock.com. Our second question is from Charles. It says, you're always talking about how you can get 5% or more income on your retirement portfolio, but I looked deep into my 401k and it doesn't seem to offer any of these options. What can I do? It's a great question. And it's a common concern for those nearing retirement who are looking to optimize their income strategies within their retirement accounts like 401ks. So let's break down why this is a challenge and what options you might have. As you rightly pointed out, 401ks are primarily designed as retirement savings vehicles to attract and retain employees, especially younger ones. Consequently, the investment options within 401k plans often lean heavily towards growth-oriented assets rather than income-focused investments. This is because younger employees typically have longer investment horizons and can afford to take more risk for potentially higher returns over time. Now let's break down or bring back our kind of equation. Total return equals income plus growth. TR equals I plus G. You're focusing on the income component and wondering why your 401k doesn't offer more options that generate significant income. The reason is clear. It's not the primary objective of most 401k plans to emphasize income generation. They're structured to help build wealth over time through growth investments like stocks and growth-oriented funds. But here's the good news. Many companies have recognized this gap and are starting to offer solutions for employees closer to retirement. One such solution is an in-service rollover. This allows you, if your plan permits, and you meet the age criteria, that's important as well. Often it's 59 and a half, right? To roll over a portion of your 401k funds into an individual retirement account, an IRA, while still employed. This rollover is typically tax deferred, meaning there's no immediate tax consequence. Now, once you move your funds into an IRA, a world of income generating investment options open up. You can choose from a variety of bonds, dividend paying stocks, REITs, real estate investment trusts, and other income focused investments that may not be available within your 401k. This shift can help you tailor your investment strategy more precisely to your income needs in retirement, while potentially reducing risk and volatility compared to growth-focused investments. If your plan allows for in-service rollovers, it's certainly worth considering, especially as you approach retirement. I recommend checking your plan documents or speaking with your HR department to confirm whether this option is available to you and what steps you need to take to initiate it. If you find that you're not yet eligible due to age restrictions, it might be a matter of waiting until you reach that milestone. So in summary, while your 401k may not currently offer many income-focused options, exploring an in-service rollover to an IRA could provide you with greater flexibility and control over your retirement income strategy. Remember, it's important to align your investment choices with your specific retirement goals and risk tolerances as you prepare for this next phase of life. Great questions. As always, if you'd like to send in your question, you can do so by emailing them to poollock@poollock.com. If you like what you heard, go ahead, like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.